Hello and welcome everyone to Silver Asset of the Day. So first of all, what do you need to know about silver as we head into a new week? We have in fact seen hedge funds and money managers, they've increased their net long positions in silver in the latest week. And I do still like silver to build positions on those dips back below $16.90. In fact, we've continued to add to our long positions each time we're dipping below that level. The gold to silver ratio today is trading at 86.4, and it's important to note that because typically over the month of December, gold does tend to outperform silver, but then silver will outperform gold going into January and February. This is a very common cycle within the precious metals. So what does that mean? It means over this period between the beginning of December right the way through to the end of the month, we do favor gold to outperform silver, and we'll be positioning ourselves heavier on gold than silver, but then looking to flip those profits from gold into silver as we move into January and February as well. This is a very common cycle within the precious metals. That said, the risk to reward at these levels on silver, after we've had such a significant decline from $19.60 per ounce, which we saw hit over the summer months, below $17, does provide quite a significant risk to reward to the upside once silver can break out. I would definitely keep a very close eye on the weekly chart here for silver. We just started to take out last week's highs. There is the potential for momentum up towards $17.30 and $17.50 if we can hold above $17. The major vulnerability I see with the precious metals over the next week and a half would be, first of all, Friday's non-farm payroll data, then going into next week, the FOMC statement, the European Central Bank announcement, and also the UK elections. These will all be catalysts for some big price moves. Personally, if we do see any significant pullbacks in the metals, I would be looking at those as buy opportunities into this very strong cycle, seasonal cycle going into January and February. But what we may in fact do is see a very shallow retracement and just continue to build up momentum from these levels and actually break out higher earlier than many traders are perhaps anticipating, given the fact that we had such a significant decline over November. Gold prices pulled back 3% over November, silver prices pulled back over 7%, and we're certainly seeing a bit of recovery. For this week, I am looking at range bound trade. So again, with gold, I'm looking at support around 1454, up to that resistance around the 1475 to 1480 region. And with silver, I'm looking for support around approximately that 1680 to 1685 level, and then resistance coming up to around that $17 to $17.30 handle for silver over the course of this week. Now moving on to today's Q&A, our first question today comes from Mohinder, and that's with regard to how active the month of December tends to be for the markets. Is it a period where you see traders start to wind down, or is it a time to be more heavily trading and active in the markets? Definitely for the precious metals, December tends to be a big month. And you absolutely don't want to be taking your eye off the ball here because there are some great trade opportunities. The first week of December already, we've seen significant breakouts in the last 24 hours on gold. Palladium has reached all-time highs yet again just yesterday. Platinum, as I mentioned before, banked us 800 points over 2 trades just a week and a half ago. And also we're starting to see silver climb back above $17 per ounce. It's absolutely a time of year where you do want to take advantage of these opportunities. There are plenty of news items, as I've gone through on Gold Asset of the Day, which are going to be very lucrative over the course of this month. And you also want to watch out for the price action on week commencing the 16th of December. Typically, this is where you can have these rallies where you have a lot of traders who are not as active in the markets. When there's less liquidity, it's often the time when gold, silver, platinum, and palladium can really build up significant momentum. You only have to just go back to the last 5 years of price action between mid-December to the end of December to note that on the precious metals. So definitely it's a time of year where you want to be available to take advantage of these opportunities. The next question today is from Johan, and that's with respect to moving into 2020. What are we expecting here for the precious metals? Is it a good time to really start learning the markets and get into the commodities? Absolutely. So we have some very clear cycles that you want to be taking advantage of as we go into the months of January, February, and also March, not only for the precious metals, but also on crude oil in particular as well. Generally speaking, the best performing months of the year for the precious metals, they are January, February, and August. And this is a time of year right from the very start of January where gold, silver, and platinum tend to outperform other commodities. So you definitely want to be watching those markets closely. As I mentioned before, typically this really starts to build up momentum from the 16th of December onwards. So for us, it's definitely not a time to take a step back. You want to be actively managing trades and really maximizing the opportunities over this very strong seasonal period for the precious metals. So with that, that's been Silver Asset of the Day and today's Q&A. Thanks again for all of your questions, and of course we wish you good trading.